let me introduce myself again. My name is Gerald Perez. I'm the Chief Executive of Interactive Brokers UK Limited, which is part of the Interactive Brokers Group. Interactive Brokers Group has been around for 48 years. The market cap of the group is over 60 billion US dollars. We're in 200 different countries around the world, and we are very embedded in technology. Today's presentation is going to be a little bit outside of my responsibilities at Interactive Brokers. As you heard from our nice hostess, I have an academic background as well, MIT, University of Oxford, Cambridge, and I'm right now doing a postgrad degree in artificial intelligence with strategic implementation. So part of my love is online trading and financial markets. So the goal is to give you a little bit of insight of some of the research that I'm working with King's College, UCL, and Oxford with respect to a paper I hope to publish in the very near future. And hopefully it'll give you some insights of global trading, how technology is taking advantage of helping the investor, and some of the trends that we see worldwide. I'm going to highlight 3 different points: the emerging trends in online investing, leveraging tech tools to navigate global markets, and data-driven decision-making. How many of you are investors? Okay, fantastic. If you have any questions, feel free to raise your hand and let me know. So the emerging trends that we see, not outside of MENA, but also in the MENA region, is global diversification. What does that mean? Effectively, individuals are looking to trade international markets, and the reason why is because platforms are allowing you to have the availability to do so very seamlessly. In addition to that, the costs have dropped dramatically. So depending on where you are in the world, you could trade international markets as cheap as you could trade the local market. Previously, that was unheard of. And why is diversification very important? Because it mitigates your risks and it improves the opportunities that you have worldwide. The other trend is obviously technological advances. You have a lot to do with generative AI, and you have automation, algorithms, and we'll talk and we'll delve into that a little bit. The other one is low commissions. We're seeing a trend in a lot of regions, specifically in the United States, as well as in continental Europe. You'll hear such things as zero commissions. However, what you're finding in the research is a lot of this is basically what happened in the 1990s and early 2000s when it was no commission. What they did was basically increase the spread. But as investors, you have to be very cognizant of the risks of trading in zero commissions. The other part, which is very good for you being in the MENA region, is 24-hour trading. Obviously, the times that you're allowed to trade previously were really isolated to the large markets, whether they're North America, Asia, or in continental Europe. But now with the evolution of 24-hour trading, it's giving a lot of investors, specifically in the MENA region, the opportunity to take advantages, no different than if you were in any of those other geographical regions. And the last one that is really trending up is education and support. Education is so important to the investor because even if you want to take advantage of diversification, technology, or 24-hour trading, you need to have the education to be able to know what you're doing. Market rules change in different geographical regions. If you don't know what is actually behind the door, you are at a disadvantage. So let's look at a little bit of the research that I came up with and what the impact is on the shareholders. Now, the research that I came up with comes after looking at different studies. A lot of the studies come from being paid In addition to that, there's a lot of articles and there's a lot of historical trends that basically I've been able to determine what are the trends coming up. So let's start with the first one, diversification. As you can see, the trend is obviously stocks in the United States, the S&P 500, you see ETFs, you see mutual funds. The other one is commodities. Obviously, with the sanctions, you're seeing gold, highly traded, and other commodities in great demand, specifically from the MENA region. Obviously, Forex because of geopolitical concerns, and it's actually trending up more and more in different parts of the world. You're seeing the trend, especially in South America. Next, as you know, mutual funds are starting to take trends in different parts of the world, specifically in continental Europe. And the last one is derivatives. Now, you don't see on there crypto. Crypto's actually been pretty stable for trading. For payments, it's actually trending up, but my research is concentrating more on the trading side. Now, the positive impact for the customer is it's easily and accessible. A lot of the brokers are now trending that way, and that's very important for you as the investor because you do not want to have barriers, you do not want to have speed bumps. You want to be able to do it all from one platform, from one account. That's critical. If you do decide to go with a broker and they basically fragment it, it's going to slow things down for you, it's going to add complexity, and it's going to add cost. The other part is it's the efficiency of the diversification. Someone previously asked me, why do I want to diversify? Imagine that you're in the UAE and that you plant a crop. If you plant a crop, you're exposed to the local weather. But if you diversify your portfolio, you have the opportunity to plant a crop overseas in good weather. So that crop does well and your crop here locally doesn't. It gives you the opportunity to mitigate those risks. The next one is technology. Obviously, we hear a lot about AI, and there's a lot of AI-driven technology coming into the market. However, the research is showing that the problem with the investor is you're not taking advantage of what AI really allows you. Let me give you an example. The prompt in these generative AI-driven applications that some brokers are giving to you have a prompt that gives you over 10,000 characters. What the user is doing is typing in, how do I make money? The output is very skewed. It's something that you call, when you have machine learning, is a hallucination, because the user is not typing specific criteria. So instead of saying, how do I make money trading the US markets? You basically should be typing in, I am an individual investor from the MENA region. I want to trade the S&P 500 stocks. My time is between the hours of 9 and 3 o'clock local time. And my risk profile is that I want to invest up to $1,000. The machine learning program will give you a better output if you become specific. If you become general, it will give you an output that is very general. And what's happening is the trader believes that it's concrete. And then they go into the market with little or no experience, and you're not actually enhancing your opportunities, you're mitigating. The other part is that you see traders, when they use AI, they're using something called causal effects. What does that mean? Let's say, for example, if I type in my prompt and the output gives me, this is what you should be trading, and all of a sudden I put on a portfolio and I make money. Now, what the investor is doing is going back into the generative AI and typing in, how did I make that money? That's causal effect. That's a no-no when you do generative AI, because the models are predictive. They're not supposed to go in and give you the causal effect. And this is something that a lot of investors don't realize, and they get caught up in an output where they think, the system is telling me how did I make money, but realistically, it's giving you an output that is very fragmented and it's not predictable. So you have to be very careful. In addition to that, you'll see a lot of chat services where you'll be able to interact for customer service. Those are increasing more and more. And automation. We're seeing a trend of investors using algorithms because the algorithms, if you're trading in the MENA region and I want to trade US markets, I could create a portfolio and you could program into the automation that I want you to rebalance, I want you to buy at a certain event, or I want you to get out of the market. And this is very good for the individual investor. Next, low commissions. As we said, you're seeing the trend around the world of lower commissions. You're being enticed in order to trade, zero commissions, but there is a negative side. And we'll go into it in a little bit. Next, 24-hour trading. That's great because hopefully you'll have enhanced liquidity, but something that you should take very, very careful and consideration, because the liquidity is not there, you get caught in that rabbit hole. The last one, as we said, you're seeing a lot of micro-learning opposed to just general learning. What's the difference? People think that when I go into an education side of a broker, that I'm going to have a 15-minute or 30-minute window. No, the trend is that you're seeing 2-minute videos, 2-minute insights, which is good because most of us are on the run. So that's starting to trend up. And you're seeing more of videos, podcasts, and you're seeing a lot more avatars. But make sure you realize that if you have an avatar that you're dealing with, that the output may have hallucinations if it's generative AI. You have to be able not to take what the avatar gives you as concrete and as fact. Rather, it's usually only accurate 80% of the time. Now, with 7 minutes to go here, you have to be careful. So let's look at, okay. Unfortunately, there you go. Things you need to take notice of. We're seeing a lot of individuals being coached to trade all over the world. However, what we're finding out is that a lot of the investors are not asking the right questions. If I go to a broker-dealer and the broker-dealer is internalizing the order flow or is giving it to a market maker, the investor is missing out on best execution. So some of the questions that we're seeing in the research is the lack of knowledge of the investor, not only in the MENA region, but outside internationally. Why is that so important? Imagine that if I go and trade on a listed exchange and I turn on a Bloomberg and the price is 5.6, but my broker tells me it's 4.5, 5.1, I'm missing out a half a tick, and that adds up to you. And this is something that is really paramount because you want to be able to move the markets. Direct access allows you as the investors to be able to move your order freely. So if I bid for 5, I could freely move it to 4.3 without no hesitation. If a broker doesn't allow you to do that and the market swings and there's a delay, you could imagine what could happen to your order. You're going to get hit as the market goes down, and you're going to get hit as the market goes up, and you lose those ticks, and every tick is money. The other thing is costs. We're seeing a trend globally where, again, a lot of brokers go out and they market that it's zero commissions. They market that it's low. However, no broker is in the business to do it for free. So you see the trend of where are the touch points for pricing. And a lot of the investors don't ask the right questions. Here, Custody. Custody is a big moneymaker for the broker. Custody could cost you in the long term. So if you are an investor, which usually means that you're holding a position for 1 year, you're basically focusing on the commission. But the real question is that you need to focus on the custodies, on the FX transactions. Why does that matter? Because here, if there's a flat custody fee of $100 and you have a portfolio of 1,000, you're losing 10% even if you don't invest. That is crucial because you're losing money. And even though there's zero commissions every time you transact, that $100 adds up very quickly. And this is if it's a fixed fee. Usually they charge you a percentage, 25 basis points, 75 basis points. In the research, we even saw up to 175 basis points. The next part is on the FX conversion. You'll see in the research where a lot of novice investors were investing. However, they didn't realize that the FX charge is so great, either the spread or the commission. Next, the limitation of order types. Why is this so critical? Imagine that you trade with a broker and he only allows you to do limit and market order. That's great. However, you want to be able to have a stop loss order that's native to that exchange because that guarantees that you'll get out. That gives you the flexibility to adjust your order. So a limitation of 1 or 2 order types is not good for the investor. You want to be able to have unlimited or as many order types that you could take advantage of. The lack of transparency. You'll hear in the marketplace, and research will show that you'll get a lot of claims, come open up an account, you get all sorts of leverage, 500, 1,000 to 1, etc. However, you're seeing in different markets, specifically in the United States, Europe, and now Asia, where the regulator is saying, you got to be careful here. Why is that so important? Because what the investor doesn't realize is when you're getting that high of a leverage and you have a margin call, it's their balance sheet. And a lot of brokers and a lot of entities are not very well capitalized. So could you imagine if the market tanks and 50% of the customers are impacted? Well, where does the money come from? It comes from the balance sheet of your broker-dealer. In addition to that, the trends are regarding the segregation of the customer funds. Whether you're trading on a market, on an exchange, or you're trading just off of the book of the broker, you have to make sure that you need to know where my funds are segregated, because if there's an anomaly, you're going to have a big problem. So these are the trends that we're seeing that hopefully they will improve. Next, as you can imagine, zero commissions, the conversion fees, data monetization. We're seeing where some brokers are taking your data and they're selling it out to the market without returning the money back to you. Technology, we're seeing a lot of brokers around the world giving you 1 or 2 platforms, but we all know that one size doesn't fit all. So hopefully you'll have exposure to brokers that give you more than 1 platform, because your journey as an investor grows over the years and you need to get something that's more sophisticated. 24-hour trading, make sure you know the terms of 24-hour trading and the liquidity, because if the spreads widen and you get caught, you only have yourself to blame. And last is education. Make sure that you know that the broker is offering you objective education, micro-education, because if you don't have the education to be able to use the platform, to know what the market is, you're going into a rabbit hole, and we don't want you to lose money. Now, got 30 seconds left here. Does anyone have any questions?
No. Yeah. I see most of the points here discussing the execution and the access to market. How do you see the education and the researches and reports and information available to retail investors, is there still a big gap between the information available to the retail investors versus what's available to institutional investors? How do you see this, and how I see this is also one of the main points, the information available and the quality of the research reports available. How do you see the difference between these two compared to the professional institutional investor compared to the retail investors?
I'm not sure that I totally understand the question, but let me see if that's right. So when you have institutional traders, remember, a lot of the institutional traders are just investors, right? But they have a lot of experience in the marketplace. They're also demanding good education, because without the education of knowing where to trade internationally or how to use the platform puts me at a disadvantage. So we're seeing a demand from the institutional brokers, resellers, that they want this because they believe this is a value chain. Did I answer your question?
I wanted to ask whether the information and tools in terms of education and information, market analysis information and researches available to retail investors, individual retail investors, are on par or the same quality of what's available to professionals and institutional investors. That's mine.
Okay. It really depends on the broker that you're dealing with, but we're seeing a trend specifically in South America from the research that brokers or third parties are now starting to charge. So if you want low quality information or education, it's free, but now they're monetizing it where they're now starting to charge you a license to get the same type of fundamental analysis, research, or insights that institutional customers. So you're seeing basically monetization. Okay?
Yeah, thank you so much.
Any questions? This research is, again, something that I'm working with the universities to publish, and hopefully it will give more insights to different investors from around the world, and hopefully to giving you some of the trends that are happening out there. Most of the outputs of research that go out are 2 to 5 years backlogged. The hope here is to give you insights to what's happening now, because working on the interactive brokers, being in 200 different countries, it gives us an incredible amount of insights. So hopefully you'll see some of this, but for now, please be educated, ask the right questions, and the best of luck in the opportunities. Thank you.